There is not a scenario on a conventional loan where a lower FICO score borrower is going to get better pricing, better fees than a higher FICO score borrower with the same loan scenario. It's just not happening. This is complete fake news. And if you've been on the internet in the last 2 days, you've probably seen a bunch of social media with headlines like, is there really an unfair mortgage tax on higher FICO score borrowers? Or Biden's mortgage changes? Or Biden hates people with good credit? I mean, it is kind of absurd. And political agendas aside, I really hate bad information, and this channel is all about making smart home purchases and smart money moves, and that's why we're going to break this down in today's video. Now, for those of you who are new here, my name is Lizy Hoeffer. I'm a residential loan officer in Phoenix, Arizona. And like I said, I like to teach practical money tips so that you guys make smart decisions. If you find this video helpful, please go ahead and like, comment, and subscribe. And don't forget to share it with a friend or family member that could use this useful information. All right, so I don't ever want to poke fun at people's fears or their panics, especially as it relates to homes, because I mean, there's been a lot of shit that's happened over the last 20 years, but I honestly have to tell you that when I recorded these videos back in February and I was sending emails and I was putting them all on my Instagram, I was really shocked at the time that no one seemed to care. And I thought, well, either they don't understand your video or it's just not as big of a deal as you're making it. And so to see the hysteria that has been put out there and the misinformation has really caught me off guard. It's like overnight, this is like the biggest deal in real estate. And I will tell you that, I mean, it's kind of dangerous. Some of these headlines are really, I would say, encouraging people to lower their FICO scores to get lower interest rates. And that's why I felt compelled to make this video, because it's absolutely not a good decision to not be current with your bills, to charge up your credit cards. We want to have the best credit scores for the best terms and pricing. So I just want to say that first and foremost. To further separate fact from fiction, these changes, guys, were announced in January. Yes, January of 2023. And I think the big key factor here is the difference between loan origination and loan delivery. So what the media has really gotten off on is this delivery date of May 1st. But delivery in mortgage terms is when we package up and deliver a loan for insurance several weeks after a loan has funded to Freddie Mac and Fannie Mae. The other thing is that these changes only impact conventional loans. So not VA loans, not FHA loans, not jumbo loans, USDA loans, any type of portfolio loans or HELOCs, just conventional financing. And conventional financing insured by Fannie Mae and Freddie Mac. That is important because there is a variety of different types of loans. And just so you guys understand, a loan level price adjustment, which is what they are talking about here, is simply there's increased pricing for credit scores and debt to income ratios. And what they do is every single rate will either come with a credit, will be at no credit, or will come with a cost. And they've just increased the costs of what these risk factors are. And so there is no tangible fee that you will pay as a consumer. It's all accounted for in the interest rate. And I just want to say again, even though I started out the video, that there is no scenario in where it makes sense to have lower credit than higher credit on a conventional loan. Now, that being said, the changes, just to explain them, they've added some for debt to income ratio and for property type. But the biggest one, the most significant one, had to do with credit. So originally, before the change, a 740 FICO score was considered the top tier for credit. Anything above that was just gravy. If you had a 740 FICO score and above, you got best tier pricing. Now, subsequently, people with 680 and below FICO scores, they had higher pricing hits. And so they've lowered the pricing hits for lower FICO score borrowers, and they've extended the credit tiers. And now 780 is now the best credit tier. And anything above that is considered the same, right? So 780 will get the best credit term. Most people will see this as they are lowering the steepness of the curve, but they are extending it. And so yes, there is a penalty, right? If you had a 740 and above FICO score, right? 760, there's gonna be some price adjustments to you. But just so you guys know, most of these changes actually occurred in late February, March. I saw some lenders changing in early April, but for the last several weeks, it has been business as usual, real estate agents, consumers, they have been operating and purchasing properties just fine. Nothing is as catastrophic as the media is presenting. And so I will tell you right now, I was frustrated originally when these changes were made, but there is some significant fear that if mortgage rates drop quickly, that it could have some negative exposure to the banking industry, because banks lose money whenever a loan isn't like kept on a portfolio for like 3+ years. And so having to re-originate all of these loans again and lose them off of their portfolio could be very negative to the banking industry, in addition to Fannie and Freddie. And so they made some of these changes to slow down the rate at which people would refinance. Now, lots of people have many feelings about this, good and bad. For me, I'm just trying to report what is. So just know, I mean, we can't change any of these things. So it's just a matter about getting the information and knowing what makes most sense for you. Now, as a mortgage professional, I'm going to tell you that yes, get a conventional quote, but also look into your FHA quote. I actually recorded a video on this. FHA, which is a government-backed loan product, actually made many adjustments, or made a significant adjustment at the beginning of this year too, reducing its mortgage insurance premium. This change actually will save most clients around $100 a month on their mortgage payments when compared to a similar conventional loan scenario. I don't want you guys to be dismayed here, because if conventional isn't the right loan program for you, chances are FHA is. This has already been business as usual for several weeks. Now, if you guys have any questions at all about the changes, or any questions about some additional headlines that are causing you fear, go ahead and put them in the comments below. All right, guys, if this information was helpful to you, I hope that you will like, comment, and subscribe. Also, forward it on to friends and family that you know are in the market to buy a house. And don't forget to subscribe to the channel for more money, mortgage, and market information.